So that's why the demo account's so dangerous, because it lulls you into this false sense of security. It's very difficult and rare for a retail trader to back themselves and have the confidence to trade with their own money and realize that, yes, there are obvious risks and downside, but risk is a pro mentality. Traders like risk. They want size. They want to be able to hit the market when they can, because there's unlimited upside. The downside is just your account. The upside could be anything. Being right at the right time is just when you see things you've seen before. Like I said, I mean, for me, it's like a muscle memory. The less I think about trading, the better I trade. I just click when I see things and when I react to things or when I hear things. When you overanalyze things, it's like, oh, well, gold should go up. Maybe I should buy it at this level. They'll let it retrace to 30, 2.6. And, I don't know. I was just like, buy. Yes, and I went offside a little bit. And then it went. And then it went on 10 grand on side. Then it stalled and then went. And then within 2 hours, it's 77 grand. I'm like, yeah, that'll do. The only way you can test yourself and see what could be done is moving that size up and, seeing the rewards for the risk and seeing the rewards for the pit movements changing. And you don't have to go, from like 0.1 to 50 or to 100 or whatever. You can go to one lot. Wow, one lot. Then the next week, maybe 2 lots. You've got to be able to see and deal with the numbers, because yes, a lot of people will say that you put the trade on, the trade's the trade. Okay. And it is, but emotionally it's not. There'll be a cutoff point where the trade size means something else. When you get to my level and my size, the trade isn't the trade, because it just physically isn't. But until that point, unless you can click that button and, feel some sort of emotional connection to the trade or feel something to work with. This is the point. It's like you've got to give yourself something to work with, because if you stay in the friend zone or you stay in the kind of no fear, no risk zone, how will you know how to deal with something when it happens? You don't.
All right, folks, here we are on Trading Up. We've got Steve Ruffley in the house, familiar face. He's been on the show a few times before. Welcome to the back to Trading Up, Steve.
Thanks, mate. How have you been?
Yeah, good. Well, look, Steve's released a new book, second book that he's created. It's called The Pro Retail Trader, How to Generate Professional Level Returns as a Retail Trader. So we're going to dive in and really understand why he created this book and how it can help you as a trader. So, Steve, first of all, before we dive into that, I mean, how have things been over the last couple of years? I think we first spoke, post-COVID or just post-COVID. How have things been with you?
Yeah, fine, mate. Yeah, just like everyone else, just cracking on. Normal life. Getting by. Yeah, I guess a lot's changed in the kind of markets in the world. As you say, post-COVID, there's been a bit of a shift in everything, really, hasn't there? The markets, the commodity markets especially, and politics. Trump's back soon, so basically, watch this space. 2025, anything could happen. So I guess it's a bit of a fortuitous time that I, spent a few years writing the book, and it's been 10 years since I wrote the last one, The Rough Guide to Trading. So this really kind of tries to fill in the gaps that I think a lot of people are missing. So obviously we'll go through that in the interview, but really kind of my main aim was just kind of not to write a rough guide to trading too. So many people just regurgitate the same things. There's a lot of new stuff, a lot of kind of like personal experiences, what I've kind of gone through, how I got to where I am. And, really just this idea that retail trading is not the same as pro trading. Everyone keeps this mantra that act like a pro. Most people have never been a pro, so they don't really know what pro trading is. I've not only been a pro trader, but managed pro traders, risk managed pro traders. And it's that moving that mindset, kind of getting people out of this doom loop of learning technical analysis, learning something. Because the main reason people don't kind of progress is that it's all the psychological and emotional side that people find it so hard to difficult with. And it's always going to be difficult when you're dealing with money. And, that's the kind of main thing that I talk about. I reference money a lot, which is taboo in trading terms, but, that's what we all do it for.
Yeah, it was funny because like a lot of people that I've either had on the show or come on and done live streams and stuff, they've done really well when it's been the demo account, trying to get themselves either like funded or just even grow an account. And then it gets to like you get funded, you got the live money, and then just can't do it. And they fail every single time, and it's that sort of shift. I mean, can you sort of outline maybe some of the common mistakes that retail traders make when they try and, I suppose, emulate a pro trader or what you do on a regular basis?
Yeah, I mean, the whole idea of a pro trader, I think the first part is, a lot of people get confused between investing and trading. So when I talk about trading, day trading, I'm talking about minutes and hours. My max trade is probably 8 hours, and I don't do them very often. So a lot of people, don't really kind of understand the relativity of size and time. So if you're going to trade a small position to make any kind of realistic, reasonable money, you're going to have to trade for a longer period of time to get the returns. Whereas I prefer to trade over smaller periods of time with more size. Now, obviously, the book isn't about trading like me. I don't expect people to go to the extremes I do, but that's after 20 odd years of trading. So maybe that's the pro element that I've come to the realization of my personality, how I want to make money, how I want to interact with the markets. And that'll be different for different people. So it's a lot of ideas, it's a lot of kind of thinking. A lot of it's people that have to ask questions like I have of myself, tough questions, and you might not like the answers to them. And that's what a lot of people, initially fail, because what they're always trying to do is do something consistently when the markets are always changing and then scale up. Then the emotions kick in. You see the numbers move around on the screen. You have one or a couple of losses, and then it's just a doom loop spiral to that magic zero, which so many
Yeah.
retail traders tend to get to. And it isn't easy, and you might have a few goes at it. And the main reason I think a lot of people are trying to get these funded accounts, is something that I don't really kind of touch upon, but it's because they don't want to take the responsibility of trading their own money. So that's why the demo account's so dangerous, because it lulls you into this false sense of security. Then you trade somebody else's money, and then you got the added pressure of somebody watching you, that kind of stuff. It's very difficult and rare for a retail trader to back themselves and have the confidence to trade with their own money and realize that, yes, there are obvious risks and downside, but risk is a pro mentality. Traders like risk. They want size. They want to be able to hit the market when they can, because there's unlimited upside. The downside is just your account. The upside could be anything. And again, I'm trying to break a lot of cliches here. People, I say that one trade, shouldn't be able to break you, but one trade can make you. Every pro trader I know has had a big win. Every single one of them. I've had plenty of big wins. I wouldn't be around if I didn't have big wins, because trading wouldn't have provided enough for me to keep going. Not saying everyone has to have big wins that I have, and the style of trading that I do, but there has to be that element of we're all here to make money. Otherwise, what is the point in trading? It's a constant cycle of learning, then learning something else. Technical analysis, you must have had 1,000 people on talking about all various types of technical analysis. And retail traders get snow blindness. They end up with so much things on the chart they don't know what to focus with. And they're missing out that the market will go where it's going to go regardless of where you draw your lines. It's how the market gets to where it's going to go, and what you do with it, what you do with your account, what you do with your trades. And that's the kind of thing that I'm kind of delving into, that I think people hopefully will find interesting and maybe won't be presented this way.
Yeah. Hey, start trading Forex indices and commodities with up to 800k of Blue Guardian's capital risk-free. Just pay a small one-time fee to take the challenge, hit a profit target and get funded. Then keep up to 90% of your profits and enjoy fast weekly payouts. Now, for futures traders, Blue Guardian Futures offers up to 450k in funding with 100% profit on your first 15k. With low targets, no activation fees and unlimited resets, it's one of the best deals in the industry. Visit blueguardian.com or blueguardianfutures.com to start trading today and grab their limited time discount code. It is interesting you say there around money versus time, which is the two kind of major things here, right? Is money and time. And I mean, can you sort of talk about because I know in my mind it's there's a lot of emotion attached with money, but not so much with time, right? How do you get to the point where you got to where it's well, you kind of see them as both the same, right? It's money or time. There's no emotional attachment to either, or maybe there is, but you somehow keep it under control. I mean, how did you get to that point?
That's that's quite an expansive question, I guess, because I think there's time, money, and opportunity. And the way I describe it in the book, it's like a pulley. So you can have one. The more you have of one, the less you get of the others. So with trading, it's the perfect way to tie time and money together. You can make a lot of money very quickly, but it might take you a long time to be in the position to get rich quick, that type scenario. So it's all a give and take, and it's all a balance. So where I've got to has been a process of the learning curve everyone else goes through. My journey through the pro accounts, had a couple of go at that, and I'm being honest, I never got to be the pro trader I was going to be, because I didn't have enough funding behind me to carry on having the life I wanted. So that was pretty difficult, and I go through that in the book. Because that's a lot of retail traders that go through that when they're trying to replace income. They don't have enough money to keep track of the day to day stuff. As a young guy starting out, I didn't have I don't have kind of money behind me, rich parents or anything. So when you're in London and your desk fees are 3.5 grand a month, and it all adds up. And after kind of 60 hours a week, you think, what am I doing this for? And I started as one of the original Rev grads. So my buyout for my initial contract was £250,000. So I had to make £250,000 before I could get out of my contract and trade on better splits. So you times that by the tax you've got to pay, the desk fees you've got to pay. You've got to make a lot of money just to be able to get out of the system. And that's what a lot of these new wave of prop traders will probably find, that this isn't anything new. It's been around for a long time. So it's a different world, but the way of making money for the big guys has never really changed.
Now, in the book, you mentioned that you've got like 3 defined trading styles and 2 entry styles. I mean, can you briefly sort of explain how you came up with these and landed on these particular styles versus whatever else you sort of came across over your career?
Yeah, absolutely. I mean, it comes down to what we've talked about, money and time. So I'm very time orientated. So I know that a market will move so many, say pips or so, or so much distance in 15 minutes. So I'm classed like my scalp trades as more around time than where it's going to go. So I'll put as much money or as much size I think that trade warrants into that period of that trade, and it will run for a maximum of 15 minutes, because I know that the max profit that will be offered from that opportunity will generally have been presented to me. And then there's the next trade, was an average trade, which can last up to 2 hours. So again, that's just a different way of entering the trade, a different clip size and way of putting the trade on. And then there's what I call a day trade, which is up to 8 hours, where I'm looking for a directional move, and I'm in with whatever size I think's relevant for that trade, and then watching that trade kind of play out through the hours. So it really all revolves around my entry is my risk. So I'm pretty good at getting a trade on side, but this should resonate with every retail trader out there. How many times you've been 10, 15 pips on side very quickly, and then it's gone back to zero or gone negative, and you've ended up watching it for 2 hours, and that's all it's done. So if I was talking to a guy in Australia just yesterday who was having this problem, and it's like, yeah, I get 20 pips on side, and then I watch it for 2 hours. It doesn't do anything else. Well, so what's your clip size? 0.01 lots. Well, you have no emotional connection or attachment to that. If your P&L fluctuates 5 and 10, dollars or whatever it is, it doesn't really matter, does it? Now, you stick 1,000 lots on like I do. Yeah, I've made 10,000 US dollars in 2 minutes for footsie scalp. So I'm in, I get on side, and I'm out for an amount of money I think is worthy of that trade. Yes, it could always gone further. What if you'd have held on? That's fine. It wasn't that kind of trade. So you're in, you're out, you make each pip count and take the money you can when it's offered. And that is just a different style of trading. And it's basic of basic forms how the majority of the pro traders I work with, and this is going, way back, traded. It was scalping. You'd be on the bid of the offer on the ladders. You'd be getting filled and then, getting out as you filled. And that just isn't possible when you're trading on a retail platform, because you're trading simulated markets. And I don't book orders. I trade at markets. I don't use stops. I do a lot of things that the experts tell you they're wrong. But, I control my risk with percentage of account and a monetary stop. And you physically can't trade a scalp the way I do with a stop, because you'd always get stopped out. You'd only be able to get stopped out. And even if it automatic stops, you get stopped out. So I'm much more interested in trading fast-moving markets, trading the liquidity, and kind of being in and out. And really, you're just playing the broker's book. And that's yeah, I mean, it's edgy stuff, but, we all applaud Elon Musk and Donald Trump. They don't play by the rules. These rules that have been set for so long, why are retail traders not any better? Why have the
Mm.
stats on retail traders losing money never changed? If you want to be that next level, that pro level, I'm not saying you will or you can, but at least if you want to think about it, you've got to think about these rules that are ingrained into you for a reason. And that's why I spent, a bit of a gap between the Rough Guide to Trading, because that's for everybody. Anyone can read that. It's very simplistic. This isn't telling you should trade like this, the pro retail trader. It's telling you if you want to take the next step, there are things you need to think about from personal level, an emotional level, from a bigger picture level, from an understanding how the markets work level, if you want to make that jump, that next level. And yes, I'm pretty brutal honest in everything I do. I am. And I don't sugarcoat it. And yeah, this level might not
Yeah.
be for everyone or be attainable, but doesn't mean you can't think about it. You've got to read and think about everything, I think, in trading to a point before you figure out who you are.
Yeah. Yeah. I mean, it's funny that you say no stop loss. And I do remember this from last time we had you on the show. And it's since then, I suppose what I've discovered is there are a lot of traders out there that actually do very well and they don't use a stop loss. And I'd say by far the traders that are doing consistently well are the ones that don't use a stop. Versus the ones that do use a stop and might sort of, be break even or make small profits and losses. But the ones that don't use a stop and who trade their own money tend to do better. Now, I'm not sort of advising not using a stop loss, but I mean, can you talk us through the downside of the no stop loss approach? I mean, what are some of the things you have to deal with because of that?
Yeah, I think the whole idea of a stop loss for me really is more of an investing mentality. So you put your stop in and you take profit and you walk away. I never leave the screen when I'm in a trade. Anything could happen. People expecting the markets to do all the hard work for them. And it's kind of like if you put a trade on and it goes in your direction, one of the things I hate most about that kind of directional trading, especially people who trade small size, is the frustration they get that they're not making enough money, because the market will do this. So all you're doing is leaving money on the table as it moves. So I see kind of people that trade that way as more short-term investors, and there's absolutely nothing wrong with that. But what I'm talking about from my perspective, from day trading and intraday trading and using liquidity, using size, using, the kind of market movements to be in and out, it's a different thing. So the downside is you have to be pretty disciplined and you have to accept that, your stop has to be a finite stop in percentage of account or money terms. So yeah, I mean, it's, I think the problem is that people don't trust themselves. This is the problem they don't trust themselves with their strategy. They don't trust themselves with the stop. They don't trust themselves even with their own money. When people come to me for mentoring, all they're really asking for is permission to say that it is possible. They could do it on their own, but some people just need that kind of little bit of guidance, reassurance. And, when I mentor some people, I will say, yes, trade with a stop. Because if you're trading for a few hours, there's nothing wrong with the stop. There's nothing wrong with the trailing stop. There's nothing wrong with moving your stop, okay, in certain circumstances. It's your decision. It's your strategy. You're the trader. I don't know why people keep insisting that they have to look for this set of rules that makes the perfect trader, because they don't exist. So for me, when I'm trading very quickly and very big size, the idea of using a stop, it isn't physically possible from a management perspective. Again, P&L, you're 10 grand offside, 3 grand offside. You see that. I've just got a big red close all button. As you know, I'm right.
Yeah.
I take all the profit. I'm wrong. I take the loss. So it does take a bit of experience and it does take a bit of confidence and belief in yourself. And really for me, unless you're holding a trade for a long period of time and you have to be away from the screen, I don't see the need for a stop. If you're not disciplined enough to see the numbers on the screen and click the X, or, you can have my big close all button if you want, doesn't matter. You can have that. And then you're out of the trade. It's your responsibility. So that's how I see it. I'm in front of the screens, we're in front of the trade. And, so many times, when you're trading very busy periods, a bit of news can come out and, your trade goes, it can go, much it more in your favor, or it can turn in reverse and take you out, and you don't even know because you weren't in front of the screens. You stopped out for no reason. If you're in front of the screen, you could have done something about it. So I think my main kind of view on the kind of stop situation is really, I think people see it as a get out of jail card free or a necessity. And where I think, I mean, I'm invested in my trade and the screen time that I have when I'm trading. I'm managing in it constantly. I'm involved in it. I'm vested in that trade.
Mm.
I'm not simply walking away and letting the market do what I think it should do.
Hypothetical question. I mean, what if you had to trade 0.01 lots, right? Or 0.01 lots. Do you think you would get, excluding the money side of it, just from a pure metrics, wins and losses and that kind of thing, do you think you would be as good a trader as you are?
Yeah.
You would?
No, I wouldn't. I'd be a terrible trader.
Oh, you wouldn't? Oh, you said no. I thought you, yeah. You'd be terrible. All right.
I just have no interest in it. I'd have no interest. I mean, I set my clip deliberately high to stop boredom trades. If you're not clicking that mouse and coming forward and looking at the screen and concentrating, doesn't mean enough to you. I'm saying you don't have to go to the extremes I do, but so many people put a trade and go put the stop in and go, well, if I win, I win. If I don't, I don't. And that's not how you progress as a trader. It really isn't. It's a good way to learn, and it's a good way, to kind of fit in a strategy and understand what you can do in the market and get a base. But so many people don't move off that base. This isn't a book about hand holding or me telling you that it's all going to be all right. It's the only way I know to make the money I do is time and size. That's been the only constant in my trading and what I've seen other, very successful traders do. And yeah, I'm not an investor, I'm a trader. So if you want that money, that then big day trade or big hours or big, 2-minute trades like I have, it has to include some variation of size. And that's what I don't think people are willing to do, because people don't know how to average into trades. Or they're kind of looking to, put initial trade on and then wait for confirmation. And then you need some retracement. And then it gets so complicated and kind of, over analyzed and over kind of worked that you've taken your eye off the overall goal, which was to make money.
Yeah.
I think people just waste so much time over analyzing things. The markets are dead simple. Trading is easy. It's a click of a button. But as soon as you click that button, everything becomes hard. But if you don't have that emotional connection to the trade and you're not vested into that trade and you're not feeling it. That's what it's so hard to put through the book. You got to feel it. I talk about how I control my emotions. I have fear. I have greed. Can't say those words in trading. No, you can't. Yeah, but it's not fear and greed. It's urgency. And it's hoping that I've got enough average in to cover my positions. And, I don't get stressed or get angry. I harness my emotions. If you've ever been in a trading floor and you've seen people's faces, you tell by the eyes. There's a level of concentration people go to when money's on the line. Okay. And if you want to invest, you don't want any of that. You want someone else to do it for you. Or if you're trading for a long period of time, you want to put your stop in and walk away, have a cup of tea, walk the dogs and come by. Yay, I've made 10 grand. How many times does that work out for you? Whereas I'm in that trade for the second I press to get in to the second I press out. And there's loads of analogies. I don't want to say too much because I think they're pretty good. So, I think they're quite amusing as well. So, this analogy is the way I kind of cope with things and how I kind of relate them to other things. And they're in the book. But the thing is, you're never going to experience that unless you take it to that next level. You're never going to experience things I've experienced because you can't. And it isn't about how much you win. It's about how much short-term pain and risk makes you almost uncomfortable at the start. As I say, it's all about the entry. So my kind of, greatest asset, I guess, as a trader is my ability to take short-term pain. So I've got no edge over the markets. I trade an MT4, always have, as you know, use my charts, haven't changed in 9 years. I can read economic data and analysis like anyone else. But, I have business internet. Does that make a difference? I'm not relying on speed. I'm not relying on direct market access. I'm relying on my ability to take short-term pain, to understand the risk involved, and to hit the market when I think there's an opportunity with what I think is enough size, and to get it out as quick as I can. This whole idea of taking profit the first time is offered is so invaluable when you first start trading, because if you just do that over and over again, you're going to start seeing the rewards and seeing your account build up in real time. Whereas everyone's like, oh, it's a grand on side, then that's gone. That grand might never come back. And the time you invest and the pain you invest, it just wears you down over time. So this is where I kind of disagree with the 1 or 2%, kind of stop on your account for each trade, because the amount of trades you have to do in a row to get to any level of making money, and the time you have to invest, that's the odds are stacked against you, and that's when I come back to that idea of the big wins. And I don't sit in front of the screens, 10 hours a day anymore like that. You can watch your phone. I look for certain types of activity, certain types of events. I want to trade the volatility. And again, by making every pip count and trading a bit of size, a 20 pip winner to me is going to make a lot of difference. Well, not a lot of any difference to my life, but it will make a difference of how much you make compared to if you're trading 0.01 lots. Because no matter what happens, it could be the end of the world and you get a 10,000 point move. Still not going to make that much difference, really, is it? And obviously, that's the end of the world and we're all dead. So what does it matter?
Yeah. Well, it's funny. So it took, I don't know how many episodes, but it was only, I think, in the last year where I had this Romanian trader on, Alex Lera, and she was the one who sort of first mentioned it. And it's kind of what you're saying, which is like, basically, she knew that she had an issue around becoming too much of a technical analyst versus a trader, right? Yep. And what you're saying is, this is trading, and you're basically going to be a trader versus a technical analyst. And I'm kind of now just thinking in my own mind that a lot of the other guests I have on where they, what's your strategy? Or here's my strategy. But the reality is probably not their strategy, or it probably is a sort of dumbed down version of their strategy where everything lines up. But at the end of the day, they're going to make changes based on what they're seeing at the time. And then somebody goes and tries to replicate what they've created in a mechanical way, and it doesn't work because they're not really doing that, because they've decided that I'm not a technical analyst, I'm a trader. So if anyone's listening and they're new, something to think about when you learning the next strategy. So you said being right at the right time is the cornerstone of your approach. I mean, how do you define being right, and how can retail traders also develop that kind of skill?
Being right at the right time, it's got two elements to it. So there's going to be things that happen in the markets, in the world, and they're going to have a very clear outcome. So one of the trades in the book is when I was trading, and it came over Twitter, the news feed, that Russia was invading the Ukraine. So I had a number of accounts, because that's what I do. I trade a number of accounts, but I traded a relatively small account, $30,000, I think it was, and I bought gold, max I could, 40 lots. I made $77,000 US, $70,000 US in 2 hours. So anyone can do that. Anyone can do that, because that's not a massive account to fund. I'm not going to say those events are going to happen all the time, but that's an event. That's news. Now, you see, again, gold is a safe haven, so I don't want to kind of rehash the kind of, the basics of trading. So something was going to happen based upon that. Now, I could have made a lot more money. I had lots of bigger accounts I could have traded. But, again, I'm always happy to take a good win. This is the difference between the pros and the retail. They want to have the big win all the time almost, or they want it every time they trade big size, or every time they trade, they want to see that immediate outcome. So for me, that's just another example of, being around long enough to know when something happens, this is probably the best thing to do. But you don't stick But again, in hindsight, if it was going to end up in World War III, where we are now, we're just not telling people, and the world ended, what would it matter? If you'd made loads of money, then it wouldn't have mattered anyway. This is the problem where people try to overanalyze things. There are certain things happening in the market. There are certain setups where, yes, you can trade it with 1 lot, 100 lots, 1,000 lots. If you're committed to it and you think it's a good trade, then you have to do it. If you spend more than 2 or 3 years learning to trade, and you're not in the comfortable with yourself, you say, well, I've seen this setup before. I've recognized this pattern. I've heard this piece of news. This happens, and you don't have enough committed behind it. What are you trading for? Because the only system, strategy, outcome for any real trader is to make money. That is it. So, for me, being right at the right time, there's an element of luck as well. You might just be sat there and something happens. Because if you're not in front of the screens, something happens. Well, you might not be able to trade it. So being right at the right time is just when you see things you've seen before. Like I said, I mean, for me, it's like a muscle memory. The less I think about trading, the better I trade. I just click when I see things and when I react to things or when I hear things. When you overanalyze things, it's like, oh, well, gold should go up. Maybe I should buy it at this level. They'll let it retrace to 30, 2.6. And, oh, I don't know. I was just like, buy, buy, buy. Yes, and I went offside a little bit. And then it went. And then it went on 10 grand on side. Then it stalled and then went. And then within 2 hours, it's 77 grand. I'm like, yeah, that'll do. So
yeah,
I don't know how easy to make it. That takes a long time, a lot of confidence in yourself and being in the markets for a reasonable amount of time to say X equals Y, I should do this. But it's no different than anything else. If everyone's looking for this secret, technical setup or this light bulb moment when they get consistency, then the market will throw you a curveball and something happens and it dents your confidence. At the end of the day, each trade is its own thing. And that's what I'm saying. I just boiled my 3 types of trade down to time. So it's just time and size. That's all I do. And look for the same opportunities, same kind of setups. As I say, my charts haven't really changed. So a mixture, 50-50, I guess, these days between technical and trading, kind of news events, or kind of stay away from hitting data. Even I've been hit pretty hard on data recently because a lot of the data is manipulated and just fake, actually. But you'll all learn about that when you've read the book in 2025 when, everything starts to unravel and everyone realizes that, the NFP is basically just a fabricated number now. But that's a conspiracy theory. I don't want to go into that, People are starting to, whenever you've read as much technical analysis and been in the market as long as I have, something doesn't make sense there. So that'll all come out next year.
Yeah, it's what I was going to say was like, so you're based in New Zealand. Same with me.
I am. Yeah.
What sessions do you trade? How do you trade? Like, do you trade into these like New York session where your NFPs at 1:30 in the morning? How do you do that?
You just stay up.
So you stay up most days or
not really? No, I mean, no? I haven't traded non-farm payrolls for a long time. I just haven't seen the benefit in it. I'm much more interested in interest rates, where they're in that cycle, aren't we? Where it's more inflationary based than growth. So yeah, I mean, even like it's been quite handy. Something like the New Zealand dollar, that's quite an interesting one. Even if things are slightly outside of estimate, there's big kind of moves. I mean, generally, I'm looking for a certain type of movement and volatility and volume. So I've got various alerts where I'll just kind of, something could be happening and something that I'm interested in. And then my screens are always on. So I'm generally at home most of the time anyway. I'll work from home. So yeah.
So your sort of like routine would be, you're going to start looking at the markets at London, for example, like which is our evening. Is that right? Or would you wait until New York and then just get up at 2, stay up till 3 o'clock in the morning?
No, it doesn't work like that. Doesn't work like that. No, I look at the charts all the time. So I've got my 8 things that I religiously trade. So I look at them, maybe once an hour, but that's an anticipation for something happening. So again, it will come out in the book. There's 2 types of trade. You can either be reactionary to things that you see. So the more you see, the less of that you're going to be able to get because you've seen it. Or to the right of the screen, when you've seen a market consolidate and it breaks, you're going to get more out of it because you don't know what the future is going to be. So that's a time thing. So I see something happening very quick and volatile, it's got to be a quick trade, in and out. If I see something building, I've got to be prepared to stay in the trade maybe for longer or wait for the right opportunity to get in. And then that'll be a longer trade to watch. So if you're in the trade, then it doesn't matter what's happening. I'm in my home office, so if I've got to stay up till 3 in the morning, you stay up till 3 in the morning. Got to stay up for a couple of days, I have. I'm not as young as I used to be, so I don't do that often. But that again comes back to what I wanted out of trading and what I wanted out of what kind of resonates and connects with me. So I'm much more comfortable trading shorter term positions and being in and out, maybe lots of activity, and then sitting out for a few days or till the next opportunity. A lot of trading is just sat on your hands waiting for the stuff that resonates and clicks with you. People, this is what I kind of say for the pro traders and the retail traders alike. If you sit in front of your screens for 8 hours a day, you're going to see something. Doesn't always mean that's the something you should trade. But, people think screen time is valuable, and it is valuable when you're learning. I've done my screen time, I've earned my stripes, so I just wait for the things that interest me and I know I want to trade, then I get involved. And as I say, I don't mince about, if I see something, I'm going to trade it. I'm going to trade it with some size because I want the money. That's simple as that.
It's funny. It's interesting. Like, I mean, I think if you go back to that Ukraine example where, Russia invaded Ukraine, somebody who's trading a set fixed strategy is, could sit through and watch the whole move play out and go, I just think it my setup. And they miss the whole thing. Whereas what you're saying is, I know that's probably going to, everyone's going to rush to gold. That's a high probability, opportunity. I'm going to
the highest.
Yeah, the highest. So
it's never 100, but it's got to be close.
Yeah. So it's kind of like it's a no brainer, and you the fact that you're like happy to just go, well, that's that looks like a good place to get in. I'm not going to wait for the best ever price that I could ever get, which sets all these rules up. It kind of makes sense. It's a very different way for people to look at things. I mean, with that in mind, your psychology has to be different from everyone else out there who's struggling and who doesn't trade this way. I mean, what are some of the sort of key elements that you think you do differently from what guys that have come through and been mentored by you? What are some of the key things you might sort of go, I see it differently from that person, and I know why, or I can see their problem, but I can't. I suppose, well, maybe you can try and get them to think like me, but it's probably quite a difficult job to do that. I mean, what do you think the difference is, and how can somebody fix that problem for themselves? Again, another very good question. Everyone has their own personality, and even the markets have their own personalities. So there'll be certain things that gel with, kind of certain people. I'm not trying to make anybody like me. I'm not trying to make anybody a different type of trader. The problem with this is that people don't want to take ownership of their own responsibilities. So it's like you mentioned, you're going to play golf. Okay. So yeah, I'm an all right golfer. So I went to a lesson with a pro, and he says, you got to golf? I said, well, I can hit it pretty far. So I got down, did my grip, hit a ball. He goes, that's great, Steve. Yeah, you can hit that 200 yards, that 7-iron. Great. How many times in a row can you do it?
Yeah.
Maybe 3 times out of 10. He goes, well, what I'll just change is a few things. I'll just change your head position, your grip, the way your feet are, the way you position the ball, and the way you swing. Oh, is that it? So just because you can do something doesn't mean you're going to be great at it consistently. So for me, all this idea of how I think, how I approach things is just a combination of my trading journey. And it's a combination of the things I got right, the things I got wrong, the ability to stay in the game, the ability to never give up, and my unwavering motivation to keep doing what I know has made other people a lot more money than me is using size when it's the right opportunity and trusting myself when it's the right opportunity. And you can't really teach that. And this is the problem, or not the problem. So this is what I do with the mentoring. I help people get over that learning stage, that learning phase, and move on to the next level. And that's the springboard. You're either going to jump off, belly flop, and you're done for, or you're going to progress and do better. Not saying that you're going to be the trader you wanted to be. Even I didn't get to that point. I don't think I'm ever going to get to the level of trader I envisioned in my head. But as I say in the book, I'm not the best. I'm all right. I was going to call the book Mr. Average, but I didn't think people would get it. But yeah, that's it. At best, I'm average, but I'm average in a pro level of money. So I'm doing all right. I'm doing fine. I'm not out there Wolf of Wall Streeting it on my yacht, but I'm absolutely fine. I've got enough out of trading that I think my time was worth. And yes, it did take time to get to where I am, but I think a lot of people just give up before that point, or don't have someone there to say, well, okay, you're not getting to where you are right now, but you're not really trying to. You haven't really have a plan in place. You don't have a structure. And it's like, oh, yes, but, I'm looking at the moving average and the high Kinetic candles. It's like, how much do you want to make in a month? I don't know. How much do you want to make in a year? I don't know. Well, how much do you want to make in a trade? I don't know. Lots. Well, that's not a plan, is it?
How do you achieve a plan if you don't have any goals? And you'd be amazed how many people will fund an account with a decent size of money and they've no idea what they want to get a return on it. So, it's there's lots of little things and there's lots of things that people put in place, but it's just going back to the pro example with the golf. Yeah, and he changed all those things. And I was crap. I couldn't hit the ball after that. But then you get it right, and all of a sudden, instead of 3 shots out of 10, you're doing 7 shots out of 10.
Mm.
Because it needs someone to tell you, okay, maybe you have to tweak something or change something in order to be better in the long run. But putting all your effort into reading every trading book, apart from mine, obviously, and every bit of technical analysis and everything else, that people think's important. You don't know what's important because you haven't been through it. You haven't done it. And this is the whole point where I can't stand all these guys coming out saying, like, trade like a pro, do this. It's like, you've never been a pro. How do you know? I have been a pro. Okay. And I wasn't that good at it, but I managed some people who were very good. And there's things I picked up and put into the retail world. And yes, I'm an okay trader and I've made good money, but am I the best trader? No. There we go. Doesn't matter. I still achieved all my life goals that I wanted to achieve through doing this.
Yeah. Yeah. It's funny because it reminds me, like, a friend of mine sort of said, because we played a game of golf ages ago, and he's like, you realize that when you're watching a PGA Tour event, 100 people let's say 100 people into that event, they only focus the camera on the guys who are leading the pack, like the first, top 5 players that are doing really well in this tournament. And you've got 95 players who are absolutely having one, probably playing as bad as you, but they're still on the PGA.
Yep.
And the thing is, I suppose that's what you're kind of saying is, like, I'm still on the PGA, but I'm just not having the best day of my life with the trade that I've taken today. Maybe the $90,000 day you had was when you won the event, but every other day is a grind. It's still a grind. You're still going to struggle through it, but at the end of the day, you're still on the PGA or whatever, or whatever you want to be.
That's a great analogy. Yeah, and I think I may have used that in the book actually, but it's exactly right. Once you're at a certain level and you're not just making tens of dollars, hundreds of dollars, thousands of dollars in a day or a trade, you're on the tour. You're in the game. That's going to sustain you. That is a career. It's a path. It's it's a job, and it's paying you back for what you've invested. Otherwise, you just basically buy an expensive set of clubs, having a few lessons, then rocking up in your local course thinking you're Tiger Woods.
Yeah.
This is the thing, it's just a great way of doing that analogy that if you're in the game and you're making reasonable money, then at least it makes trading worthwhile. Because otherwise, if you're continually just in the on the putting green or in the driving range, that isn't the same as being out on the course. It isn't the same. And I think the only way, and again, I don't want to keep pushing it, but the only way you can test yourself and see what could be done is moving that size up and, seeing the rewards for the risk and seeing the rewards for the pit movements changing. And you don't have to go, from like 0.1 to 50 or to 100 or whatever. You can go to one lot. Wow, one lot. Then the next week, maybe 2 lots. You've got to be able to see and deal with the numbers because yes, a lot of people will say that you put the trade on, the trade's the trade. Okay. And it is, but emotionally it's not. There'll be a cutoff point where the trade size means something else. When you get to my level and my size, the trade isn't the trade because it just physically isn't. But until that point, unless you can click that button and, feel some sort of emotional connection to the trade or feel something to work with, this is the point. It's like you've got to give yourself something to work with because if you stay in the friend zone or you stay in the kind of no fear, no risk zone, how will you know how to deal with something when it happens? You don't. So that's what I've tried to talk through how I've got through it and, how I've dealt with things and how I've helped others deal with things. And as I say, it's really kind of, you think of the rough guide to trading as kind of your nuts and bolts. This is the kind of bit that fits in the in-between bits that people might not have thought of. And, that's what I've tried to do. Didn't want to write, a rough guide to trading too. There's no charts in this. And some people have liked that. Some people haven't. There's no kind of, magic secret formula that I'm going to give you that, is the setup for trading. There's a lot of things that I've explained how I've done it and helped others, and how you'll have to ask yourself these questions. And if you want to take it to the next level or progress in any way, you're going to have to ask yourself these tough questions and also play them out. Because if you don't play them out and do them, you're never going to learn from this. You're never going to move forward. It's just that, or do that tomorrow, or that's the next trade. Or when I've done 10 consecutive winning trades, all right, it's a Tuesday, I'll do it. People are so arbitrary and put things off. The trade's the trade. So you've got to do something with it.
What if a retail trader was like going, right, I want to become a pro level trader, and you had to say, well, look, put this routine or habit in place, what would that be?
I mean, the routine is down to every individual. I mean, some people are going to focus more on the technicals because that's their nature, that the personality. They're much more, kind of, call it mathematical, call it the kind of quant style. That's what they want. They want to be right. They want to know if they do see this, see that, and it all lines up. They want to be right. Now, being right is very different than the desire to make money. Okay. So you'll see that on the floor. There were people that didn't really care. Some people barely had candlestick charts, mate. People worked off bar charts or market profile. That's all they had. But they could still hit the button. They could still make the money. It's not about intelligence. It's not about knowing more. It's not about that routine. Whatever routine works for you. You can read the FT, read every bit on news, but are you prepared for the narrative? Reading news, does that make you more informed, or does it make you indoctrinated? A lot of things have changed since COVID. A lot of things have changed over the last 10 years in the markets that I've seen. So there's lots of things you have to think about. This is much more of a thinking person's book to think about, why is this happening? Why is that happening? And I'll go back to one of my first statements. If we've got more access to information than we've ever had, we've got faster internet, better performing brokers, better education. You could buy a great course for 10 grand apparently off XX Trader. Why are retail traders not really kind of getting anywhere? It's the same percentage that are breaking that mold of moving into the next level. They're all doing something different, surely. Because if we all do the same thing, it's all coming out as the same results, then it's clearly not working, or maybe it's working absolutely as it should do. Think about that.
Now, look, we'll close this interview up here with a couple of final questions. Now, if somebody was going to read the book, The Pro Retail Trader, what is one key message or mindset shift that you hope they take away from it?
That there's not one size fits all. That, if you put your money into your account, you've got the exact right to trade however you want, no matter what the experts, the so-called rules, the gurus, anyone tells you. You're your own boss. You're the trader. You take responsibility. There are bad habits and things that, you'll try and don't want to do again, but you have to develop and own your own style. And I want to stay away from that strategy because that just fits with the technical charts, doesn't it? You've got to fit your own style of making money from trading. That's what I want people to take away from that book.
Hey folks, what a view behind me. I'm at Black Bull Markets headquarters here in Auckland, New Zealand. Speaking of views, you can get TradingView paid plans for free at Black Bull Markets, saving you up to $600 a year. That's right, get either the Essential, Plus or Premium plans absolutely free, and all you need to do is trade from one lot a month at Black Bull Markets. And you can also get a 100% deposit bonus for your first deposit up to $1,000. All you need to do is click the Trading Nut link in the description below.
Brilliant. Well, look, our final question, for somebody on the fence about buying this book, what would you say to convince them that it's worth the read?
25 quid. If you can't afford it, then you're never going to be a trader anyway. So.
Brilliant. That's
honestly, mate, come on. I can't even control. I think it's 20 quid on Amazon now. It's £5 off. Yeah, if you can't invest 20 quid to read the book, then I don't know. I tried very hard to write it from a personal perspective and, not to regurgitate things that are in the first book, and to write it that would resonate with the people that are on the cusp of making it, but also resonate with the 80% or so traders that never make it. So it's coming up to the people that are getting close to make it and the people who have made it. That's where I'm aiming at. I'm aiming at the people that are just missing a few key parts that I might be able to fill the gaps in. So again, it's aimed at retail traders. It's called the Pro Retail Trader because it's getting out that retail mindset of where we know the majority of outcomes going to be, that 80% or so are going to either lose money or, kind of blow up an account. So I think it's something a little bit different, but then I don't read other traders' books anymore, so I don't know. Someone will have to read it and tell me.
Yeah, and look, Steve said that he did actually write the book himself, so it's not ghostwritten or anything like that.
Oh, no, I mean, both books are written completely by me, so you'll probably be able to spot a couple of spelling mistakes or something. So, you know, I write like I speak. You know, I'm from the kind of, you know, from the gut, from the heart. I, you know, just tell it how it is. I'm not sugarcoating things. And, yeah, I mean, by all means, mate, I'll be looking forward to, you know, any feedback you get from your guys. And anyone who wants to speak to me, feel free, you know, drop me a line. I'll chat to anybody. Yeah, as I say, I wrote the book because I could, and I had something to say. You know, I don't need the money, so don't worry about, you know, like, going out and buying it. You know, I don't get that much money for the book anyway, so it's not going to affect my life in any way. But I hope that, you know, this book will out kind of live the kind of legacy that I've done with the thousands of webinars. I think this is my kind of pinnacle. Had something to say, I've said it. Not everyone's going to get it or like it, but it doesn't matter. I've said it.
Yeah. Hey, look, folks, what we'll do is we'll hook a link up below this video or in the podcast description. So go and check it out. We'll also include Steve's other book in there so you can easily get access to them, and some of his other content as well that he dropped here on the show, which is also very valuable. So, Steve, is there anywhere else people can go and find you?
But yeah, I mean, just Google me. You know, there's plenty of ways to contact me on my site. You know, Telegram, WhatsApp, Skype. Unless you're in New Zealand, no, you're probably not going to get a face-to-face time with me. But I'm always around to chat to people, and I'm happy to speak to people, you know, willing to give it a go. As I say, you know, I don't charge for any courses. I have no control over what the book is priced at. That's the publisher. But yeah, I'm not. I'm just interested in listening to people's stories and seeing if I can add a bit of value. And if I can, I can. If I can't, then it didn't cost you anything. No harm, no foul.
Brilliant. Well, look, thanks again for coming on, Steve, folks. Stay tuned, hit subscribe, hit like, and we'll see you in the next video.